Welcome back to the deep dive. So, if you happen to check car rental prices in Maui this week, you probably got whiplash.
Huh. Yeah, whiplash is a good word for it.
The market didn't just move, it performed a complete vertical spike. We are diving into what looks like the most dramatic, well, unexpected, and frankly, really expensive surge in Maui car rental prices we've seen as of this week, October 6, 2025.
Exactly. What we're seeing is just a sudden and really intense upward jump. It completely defies the recent pattern. That slow, steady recovery pricing we've been tracking post-disaster.
Right. So the big question we have is this the seasonal rise we kind of expected finally kicking in, or is it something else, like a temporary blip?
A blip, yeah. Maybe driven by a major kind of unexpected local event.
And we do have a prime suspect, don't we? The return of the Maui County Fair.
That's right. It was off for 5 years, 2020 through 2024, because of everything. But it's back this weekend for 2025.
So could one local fair really shift the entire island's pricing structure like this? Seems like a big ask.
Well, that's our mission today, isn't it? We're going to unpack the sheer volatility of just the last 7 days.
Okay.
Compare it against the long-term average and also against last year. And most importantly, figure out what this data suggests for your strategy. If you're booking a car out of Kahului Airport, OGG.
All right, let's dig in. Let's start with the hard numbers. Let's unpack this sudden price shock.
Okay.
Looking at a 1-week rental from OGG, starting this week, the surges are, well, they're monumental. Last week's prices feel like ancient history already.
They really do. The volume and just the speed of this spike are significant. So the cheapest car you could get, an economy from Hertz, is shot up 58% in 1 week.
58%?
Yeah, landing at $312.
Yeah.
Mid-sized cars, they followed suit, climbed 31% to $363, also Hertz.
Okay, but the real action seems to be in those higher demand categories. And this is where that volatility hits you right in the vacation budget.
Oh, definitely.
Jeeps, for instance, they jumped a staggering 80%, hitting $589 from budget. And then standard SUVs, they leaped 81%, now priced at $602 from Payless.
Right. These categories are often the first to feel that demand pressure, And right now, that pressure gauge is just pegged at maximum. It's off the charts.
So if you were maybe hoping for something a bit more premium, like a convertible.
Oh, boy. Yeah, the jump there is almost unbelievable. Convertibles, remember, they already had a big 54% increase last week.
Right. We talked about that.
Well, they surged again, another 64% this week.
Good grief.
That pushes the weekly rental cost up to a high of $11,196, basically $1,200.
Wow, $1,200 for a weekly convertible rental. That cuts deep into the overall vacation budget. This isn't just a price hike. It actually changes how you might plan your trip, right?
It absolutely changes behavior, yeah.
Seems the cost of feeling that wind in your hair just spiked to, I don't know, luxury cruise levels or something.
Pretty much.
But, okay, amidst all this, explosive growth, we found one strange kind of calm pocket of stability.
Ah, yes, the minivan. They were the only category mostly spared, weren't they?
Yeah.
They increased only 3% this week, settling at $461 from Thrifty. It's a true outlier in all this, a category that just sort of refused to join the party.
The minivan is the ultimate contrarian play right now. So we have to ask, is this the smart money? Why are the market forces keeping that price down when everything else is just exploding?
A great question. We'll keep coming back to that, the minivan anomaly. But first, let's try to ground these shocking prices in some context. Are they just high this week, or are they, historically high?
Good point. How do they stack up long term?
Okay, so to measure the true severity, we compare the current prices against the 52-week median.
Okay.
Think of that 52-week median as the sort of typical long-term midpoint for rental costs over the whole past year. Now, last week, most cars are actually trading at a pretty substantial discount to that midpoint.
Right, things were looking relatively cheap.
Exactly. This week, almost everything is at a significant premium over that median.
And when we look back at convertibles, that double surge we mentioned, it's pushed them 91% over their 52-week median price. 91%.
Yeah, so you're paying almost double what the typical customer paid on average over the last year for that convertible.
That's incredible. Regular SUVs are similarly stretched, right? Selling at, a 49% premium over their median?
Yep, 49% over. It's a clear indicator that the market has, fundamentally shifted into high gear.
Yeah.
At least for now. Even economy cars are up 16% over their median price.
But then we get back to our outlier.
The minivan.
Right.
While everything else is spiking way past its typical midpoint, minivans are currently running at a 32% discount from their 52-week median price.
It's completely contradictory, isn't it? We don't really have a definitive answer for why families seem to be getting such a break right now, but the data is really striking.
It really is.
Now, what if we look year over year, compared to, say, October 2024?
Okay, yeah, compared to last year, the changes are a bit more mixed. It's not a uniform surge across the board.
Right. Economy cars, midsize cars, Jeeps, and minivans are actually about the same as they were a year ago.
Pretty much, yeah. They've basically just recovered back to 2024 levels, more or less.
But convertibles and SUVs, different story.
Very different story. They are substantially higher than last October. Convertibles are up 71% year over year.
71%.
And SUVs are up 43%, with the bigger 7-seat SUV soaring 53%.
Wow. So for some of these popular categories, we're not just back to normal. We've kind of blown right past it.
Which leads us right back to that crucial question. Is this volatility, like structural, is this the new normal, or is it really event-driven?
And that brings us back to the Maui County Fair hypothesis.
Exactly.
Okay, the fair is back after 5 years. Drew massive crowds, reports said up to 30,000 maybe on opening night. But I have to challenge this a bit. Isn't the county fair mostly locals? How much of that last-minute spike can we really pin on short-term visitor demand versus just a general tightening of the market as we get deeper into October?
That's a fair challenge, absolutely. But we have some pretty crucial data that supports the idea that this is a sudden, immediate demand issue. Doesn't necessarily matter if those renting were local families visiting relatives or out-of-state tourists coming specifically for it.
Okay, what's the data point?
For the first time since February, we have an inversion of the pricing structure.
An inversion. Okay, what does that mean in simple terms for, someone listening and planning a trip?
It means that if you booked your car today for a rental starting tomorrow, you'd pay significantly more than someone who booked that same car maybe 3 weeks ago.
Ah, okay.
Last-minute prices are now way higher than prices booked well in advance. And that strongly suggests unexpected immediate demand is just flooding the market right now.
And the numbers confirm this kind of scramble, right? The price for a rental starting tomorrow, October 6th, from the airport, OGG, it jumped 29% just from last week.
29% just for tomorrow's start. And the off-airport rental jump, even more intense, up 56% in just 1 week.
56. Wow. That just screams last-minute booking pressure, probably tied to this immediate weekend event.
It really does. But what's fascinating here, and maybe offers some hope, is the forecast data.
Okay.
Advanced reservation prices for the coming weeks, October 13th, October 20th, they're actually dropping sharply from this week's crazy high.
Oh, really?
Yeah. For example, the OGG price for this week, October 6th, is $312 for economy. But if you book now for October 13th, it drops back down to $239.
Ah, okay. So the market itself seems to be saying this spike is tied specifically to the demand for this immediate week.
That's what it looks like. The system is anticipating demand falling off after this weekend.
That is a huge tactical insight if you're planning a trip later this fall. This spike might really just be temporary. Phew. Okay, but now let's pivot. You mentioned a major aha moment buried in the long-term pricing data.
Yes. This one is about the massive inconsistencies between renting at the airport versus renting at those off-airport locations nearby.
Right. Conventional wisdom, always says off-airport should be cheaper. You avoid the higher airport taxes, the fees, the convenience premium.
That's what everyone assumes. But the long-term, 52-week median data, it tells a surprisingly nuanced story. It completely challenges that assumption, actually.
Okay, so the analysis confirms the expected savings, but only sometimes.
Exactly. It's inconsistent across different vehicle types. Yes, you do save off-airport on the high-volume segments, just like you'd expect. Economy cars are about 20% less off-airport.
Okay.
Regular SUVs, 14% less. And minivans, bless them, as you said, they're a solid 28% less when you rent off-airport.
All right, so far so good. That fits the theory.
But here's the genuine surprise. For 3 key high-demand categories, you actually pay a substantial premium to rent off-airport.
Wait, you pay more off-airport for which ones?
Jeeps. They cost 21% more off-airport on average over the year. Convertibles, 19% more expensive off-airport.
18% more for the inconvenience.
Apparently. And the biggest shocker, a 7-seat SUV. It costs a whopping 43% more off-airport than if you just booked it right there at OGG.
43% more to rent off-airport. That completely busts the myth, doesn't it? What market factors could possibly be causing that kind of massive price difference for those specific cars?
Well, it points strongly to a mismatch between supply and the specific demand at those off-airport franchises.
Ah, inventory issues.
Exactly. Those smaller locations often operate with a much more limited, sometimes more specialized fleet. So if a small off-airport place only has, say, two seven-seat SUVs and one gets booked,
The price for the last one goes sky high.
exponentially higher. Exactly. Much higher than at the main airport operation where they might have 50 of them. So the marginal demand doesn't spike the price nearly as much.
Okay, so the scarcity off airport for certain popular models essentially flips that traditional convenience premium completely on its head.
That's what the long-term data suggests. Plus, we need to note, for these three premium categories, the Jeep, the convertible, the seven-seat SUV, sometimes off-airport availability is just zero,
Yeah.
non-existent.
Right. So the airport might be your only realistic option anyway, even if you were trying to save money off airport.
Precisely. You might end up paying a premium for a non-guaranteed rarity if you try to go off-airport for those.
Fascinating. Okay, now let's take the biggest step back. Let's compare Maui's prices to the rest of Hawaii. How did other islands fare this week for the same rental date, October 6th?
Well, interestingly, this week's surge wasn't just a Maui thing. Most major Hawaiian islands saw huge week-over-week jumps, too.
Oh, really?
Yeah. Kona, on the Big Island, surged 136%.
Wow.
Hilo, also Big Island, up 73%. Kauai increased 33%. The only major airport that really stayed stable was Honolulu, which held steady at $232 for its cheapest option.
Okay, so even with Maui's dramatic surge, which pushed its lowest advertised price up to $329 this week, it still manages to be the second cheapest island overall.
That's right. Still second cheapest, just after Honolulu.
And that relative position, that's actually pretty important context, isn't it?
It's the key insight, I think. Maui has held one of the lowest price positions, usually the lowest, for 21 out of the last 27 weeks.
Wow.
So this consistent relative value, even with this week's spike, it's an indicator of that continued, slow recovery of travel to the island following the Lahaina wildfire disaster just over 2 years ago.
Right. So the current spike really contrasts sharply with that broader, longer-term picture of sustained recovery and, well, relative value compared to other islands.
Exactly. It puts this week into perspective.
Okay, so let's recap the core findings here. We've got a sudden, likely temporary surge, probably tied to the county fair. It inverted the usual booking pattern. Last minute is now more expensive than advance booking.
Yep, first time since February for that.
We also uncovered these confusing long-term pricing trends, showing off airport savings are far from guaranteed, especially for those popular Jeeps, convertibles, and big SUVs.
Right. And if we connect this to the historical context, data from, say, 2013 to 2018, it used to show prices rising pretty steadily in early October and then just holding that line. Predictable, like clockwork, right up until the Christmas surge.
But the last year or so has been completely different.
Completely. It's been defined by this totally unpredictable roller coaster ride, as we've called it before. Week-to-week surges, sudden drops, just constant volatility.
We are definitely living in an era of volatility for travel planning, that's for sure. Okay, so here is our final provocative thought for you, the listener, to consider.
Right.
Given this week's sudden spike, clearly tied to immediate event demand, what happens next? Will the rest of this fall follow that stable, predictable, historical pattern that existed before the last few volatile years? Prices find a level and stick there.
Or will Maui's car rental prices just snap right back to that recent volatile roller coaster movement, forcing travelers like you to chase prices week by week, nervously watching for the next spike right up until that inevitable Christmas surge hits?
The market's message this week seems pretty clear.
Yeah. It's currently telling you, book early or brace yourself for potential volatility.
That's it for this week's deep dive. We hope this knowledge helps you navigate those sudden spikes and make sense of the market.
Hope so. See you next time.
See you next time.